You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome back to The Whole Truth podcast. I'm Paul Armstrong. Talk of consolidation in the gold sector is everywhere at the moment. You'd have to be in a cocoon not to know that it's one of the hottest themes in the share market. Today's guest is Marc Ducler. He's the Managing Director of Astral Resources. Astral has what must be one of the most simple gold mining propositions in the share market at the moment. The company's Mandilla project is on the outskirts of Kalgoorlie. It's a good old-fashioned gold mining story, one big pit with 1 million odd ounces in it. The company's just completed a scoping study which shows Mandilla is set to generate strong cash flow with plenty of growth to come through drilling at depth and at various deposits around the outside, all within truckable distance of the proposed plant. It's a good old-style recipe that's seen shareholders make lots of money over many years. The Eastern Goldfields is undoubtedly one of the most desirable places for gold mining in the world. How long this company stays as a standalone entity, you be the judge. There's not many projects around with that scale in the Eastern Goldfields. The valuations compared to its peers are certainly attractive, and one can't help but wonder whether the company will become a target for one of the growth-hungry gold companies that sits around the outside of its project. Marc's a great bloke. He's done a very good job getting Mandilla to this stage, and I think you'll enjoy hearing what he's got to say about what comes up next. So as you just heard on the introduction to the Whole Truth podcast, I'm here with Marc Ducler, aka the Chocolate Eclair, and I must say, for the benefit of our readers or our listeners on this occasion, he has only himself to blame for that nickname, because several years ago I was about to introduce him to the throng at Resources Rising Stars, and I asked Marc, how do you pronounce your surname? And he said to me, Ducler, as in Chocolate Eclair, and the name stuck. So, Chocolate Eclair, welcome to the Whole Truth podcast. You've just tabled the scoping study on your Mandilla Gold Project, and looks like it's going to be a pretty big hole.
Yeah, absolutely. There's over 180 million tonnes of movement coming out of Mandilla over about 8 years' worth of mining. So it is 330 metres deep and over 1 kilometre long. It's a big hole. Now,
when I read the scoping study, I must admit the thought came to me, Marc, that this is old-style gold mining 101. Here you are on the outskirts of Kalgoorlie, probably closer to Kambalda to be precise. Well-known Eastern Goldfields territory of Western Australia. You've got one big hole with 1 million odd ounces in it.
Absolutely. So we sort of forecasted in the lead up to this scoping study that Thea as a deposit was going to convert at a really high level from resources into a production target. And the reality it has come in at over 80% conversion. So there's over 800,000 ounces in Thea. And then we're also mining Hestia and Eos to get us a total production target of 845,000 ounces over 11 years worth of processing, sort of 8 years of mining.
Now, people have been a bit singed, I suppose, over time with gold projects that move into the development and the production phase. This is about as basic as it gets, isn't it? There's nothing particularly complicated about this project whatsoever.
No, and I think people that are getting singed, I mean, we have spent a little bit of time trying to educate our shareholders in relation to that. And when we have looked at that developer peer group that has failed to be successful, for want of a better description, has mismanaged the geological risk. And we have spent a lot of effort ensuring that the mineral resource that we have put together is going to deliver on expectations. Because building a process plant, getting the right infrastructure, commissioning a gold plant, all those things are very much tried and proven and tested. And
this is hardly cutting edge technology that you're putting up here, is it? This is Kalgoorlie gold mining 101.
100%. So it's 3-stage crush, single stage ball mill, grinding to 150 micron. There's 95% recovery. Gravity recovery is 70%. You couldn't find a nicer ore body from a metallurgical perspective, to be honest.
The question is, how many ounces a year will this project spit out once it's in operation, and what sort of margins and cash flows are you talking about? That's what investors ultimately want to know, isn't it?
Yeah, so for the first 8 years, we're averaging just over 100,000 ounces per annum, and then when mining stops, we sort of roll into the low-grade stockpiles, and then we're doing about 40,000 ounces per annum. But the average cash flow for those first 8 years is about $97 million per annum, and then we're still doing over $40 million per annum of free cash flow in those trailing 3.5-4 years when we're actually treating low grade. So it generates $740 million worth of free cash flow. Geez, the payback is 3/4 of a year. So our cash outlay is paid back within 0.75 years. The NPV is over $440 million. And bear in mind, we've done the discount rate at 8% just to be mindful of the interest rate environment that we're in. We've used a gold price of $2,750. The gold price hasn't traded under $2,900 for quite a long period of time. So there's certainly some upside. And we have put in a real effort to be quite conservative with the assumptions that we've made with this scoping study.
They are conservative numbers. I mean, that discount rate is right at the upper end. The gold price assumption, as you say, is very conservative by many standards. This is simple, juicy, straightforward WA gold mining, isn't it? It's almost reminiscent of the sort of stuff that took place in the 90s that made investors a lot of easy money.
Yeah, well, these large scale open pits don't come along very, very often. I mean, I was having a look at some of the mid-cap producers because they're all starting to drop their ore reserve statements and resource statements over this current quarter. And if the ones that actually have really good disclosure and actually report down to the individual deposit level, you won't find one that's got 800,000 ounces in a single open pit.
So what happens next if shareholders would look at this and say, hey, Mark, some great numbers in here, this is pretty juicy. How can you bring this to life faster?
Well, we'll certainly as a board approve this to go through to the pre-feasibility, so we'll start work on that. There's a few things we need to do around increasing the level of confidence for the Mandilla deposit, increasing the percentage of inferred to indicated. Bear in mind the first 3 years we're at 80% indicated. Over the life of mine we're at 70% indicated. So we're actually, the ore quality, the resource estimate confidence level is already relatively good. But the next thing we need to do is do some work around looking at how that resource at an indicated level then converts to measured. So we will do that work. We'll do a conditional simulation to look at how that operates and then go and actually test it. And then we'll go, rightio, Mandilla's good to go. I mean, the reality is that sort of stuff isn't that sexy to do. It doesn't generate the exciting news flow, and we're sort of well aware of that. But then we look at what opportunities we still have at Thea, the drill results we've recently put out at Camperman. We've got some real opportunities to bring some high-grade ounces forward, and that's just going to make this project look even better again, and that's certainly what we'll be concentrating on. So at one end, we'll continue to push through the study, get it to a pre-feasibility level, and then on the other end, we'll look for how we actually grow Thea and our other deposits, which we have at Fayetteville now that we've been having some really good luck with at the moment.
Now, talk about Fayetteville, because Mandilla obviously you've ticked a lot of the key boxes there, Mark, and it does look good, but investors always want to know what comes next, doesn't it? You never want to let the dog catch the rabbit, as they say. So what happens in the rest of the wider Astral story here? How do you keep the story moving along?
Well, as we speak at the moment, we've actually got 3 drill rigs on site, so we're certainly putting in all the effort to keep the story moving along. So EOS, which is the paleo channel, which as part of this scoping study only really comes in about year 6. Once the 2 digger fleet runs out of real estate at the bottom of Thea, we actually move one of those digger fleets out and goes into mines EOS. So we've got an air core rig there because the paleo channel system is actually still continuing. We'll look to see how that expands to the southeast. So we've got that program running. We've got a diamond rig on site at Thea because, interestingly, at the bottom of the Thea pit, so around 330 odd metres worth of vertical depth, we get this laminated veining happening inside this big granite intrusion that we're actually going to be mining, and that is running exceptionally high grade. So the laminated veining is just wider veining than what you get in those sort of tensional veins, and we're seeing a lot of visible gold there. And that when we've hit that in multiple sections, hundreds of meters apart, that thing is running sort of ounce to the sort of ton type grades.
So what does all that mean in layman's terms? Does that mean there's an underground prospect here? There's a longer term underground mine emerging?
Oh, we'd love to think that there could be, but it is certainly early days. More importantly, from an immediate term perspective, is given the conservative nature of the resource estimate, when we hit that laminated veining at, let's say, 330 metres worth of vertical depth, we don't get value for that veining across strike from one drill hole to the other, because we don't have enough geological confidence to say that that thing is actually running from one hole to the next. And this drilling that we're doing now is to sort of demonstrate that that continuity of that laminated veining is there, in which case we can actually get quite a nice bump of ounces right at the bottom of the pit. And the mine is driving down to that sort of depth anyway, so it's almost like 3 ounces at the bottom of the pit.
So it's low-hanging fruit.
Yeah, for a couple of 450 metre deep diamond drill holes, which obviously aren't cheap, but it's important information for us to gather. And then if you look at Fayetteville and with the drill results that we've put out earlier in the month.
How far will Fayetteville be how far is it from the proposed processing plant?
It's 50 kilometres. So I think the best way to think about it is 0.1 of a gram of gold you would consume trucking it from Fayetteville to Mandilla. So nothing.
So it's the same project for all intents and purposes. So you leverage that infrastructure once you've got it up and running.
Yeah, 100%. And we think at Camperman there, we've now got 240 metres worth of strike. I mean, of the drill holes, we put 8 drill holes into it. 50% of them have come back at 50 gram metre intersections. So they're good quality intersections. Yeah, we had the 4 metres at 94 and a bit grams per tonne, which is a cracker. We actually panned that. We went to site, grabbed the 1 metre worth of spoils, came back and panned part of that and got some exceptional visible gold out of that. So we know we've got a free gold deposit there at Camperman that we're certainly keen. And the results we most recently put out, 21 metres at 4 grams, 35 metres at 2 grams. So, and those results seem to be bound by a dolerite unit. So there's 2 shear positions that we were projecting through. We went and drilled them, hit them, got good grade results in the proximity of those shear positions. And there's this dolerite unit, which is considered a relatively good host for gold mineralisation. So we're very excited about what Camperman could bring. And if you put a 2 or 3 gram ore body into that large Mandilla processing plant, then that goes from 100,000 ounces per annum. You get quite a good bump, and it's just pure additional cash flow.
Now, as great as these numbers sound, Mark, you'd have to say there's a big risk here, isn't there, that given all the talk about consolidation in the gold sector and the like, you must be on the radar of some of the acquirers around the traps?
Oh, potentially we are. I mean, we obviously have some history with the previous company we did in Egan Street Resources, which was taken over by Silver Lake. And I think from a shareholder perspective, the shareholders can take certainly some comfort from the perspective that we will do technical work to a quality that can stand up to the sort of due diligence that you need to do to get the debt funding, and similarly the level of due diligence that a mid-tier or a major will do to determine whether they actually want to pay for that project. We can't control that outcome. We've got a cracking Mandilla Gold Project that stands by itself on its own 2 feet comfortably. I mean, it's got $190 million worth of peak negative cash flow. We pay that back in 3/4 of a year. I mean, that's an exceptional outcome, and it gives us a long runway to then generate lots of free cash.
I mean, it's quite a tempting prospect, isn't it, for a bigger gold company that's looking for growth. The heat's on a lot of these companies to define the next avenue of growth. How do you expand your production base and your balance sheet? There's obviously a big premium being paid for gold projects in Australia, particularly Western Australia, let alone right in the heart of the eastern goldfields. It's about as good as gold mining country as you'll find anywhere in the world from an investor perspective. You've got the scale, as you say, at about 1 million odd ounces, growth potential. Surely you'd have to say it's unlikely you're going to be around when the first bar is poured at Mandilla, isn't it?
Yeah, to be honest, I don't 100% know how to answer that question, but if we put it into context...
That's the whole idea of this, isn't it?
Yeah.
You're not meant to know how to answer the question.
Yeah, so if we put it into that context, that Kalgoorlie-Kambalda region does have 30 million tonnes per annum of processing capacity installed, with Northern Star and Evolution recently announcing financial investment decisions to put in another 15 million tonnes per annum of processing capacity. So there is 45 million tonnes in that area. And
so your dirt would actually be truckable, your gold would be truckable to any number of plants in the region, wouldn't it?
Oh, it is. I mean, the first year we're at 2.5 grams per tonne. The second year we're at 1.7 grams per tonne. And then we float between 1 and 1.3 grams per tonne as we do different stages of that Thea cutback. And then as EOS comes in Yes, you can truck that material. I mean, I'm just mindful of you want the best outcome for your shareholders, and the best outcome for your shareholders is one where you don't have to truck that material very far.
And you've got enough mine life to justify, to say the least, to justify a standalone plant.
Absolutely. There's close to 12 years worth of processing, so there's plenty of opportunity there. And 8 years worth of mine life is a significant mine life. As I said, 180 million tonnes of total movement, 26 million tonnes of ore over that period of time.
So, parking the issue of whether you'll be taken out, obviously you don't have a lot of say in that, not in starting the action anyway. But moving on to what investors can expect over the next few months, what's going to keep you busy?
Well, continual growth of our deposits. So we have just completed a fundraising, so we're certainly well funded to continue drilling, which is why we'll be drilling all the way through till just before Christmas and looking to start the rigs up again in January. So we are confident in our ore bodies and we're confident in their capacity to grow. We have, over the last two resource estimates at Mandilla, added close to 500,000 ounces. That's come in at an average cost of $17 per ounce. So whilst pretty much all gold juniors and gold development MDs will lament their share price and the general lack of positive sentiment, we are valued at around $40 an ounce on an EV basis, and we're adding ounces at $18 an ounce. So it's still a value accretive business.
Something has to give there, doesn't it? You'd have to say logically, either the price is re-rated, the value is re-rated in line with some of the peers that you rightly cite, or someone comes along and consumes you at a premium.
Yeah, well, if you look at the Musgrave transaction just recently, or the one that's currently in play, if you look at that on an EV per production target ounce basis, so Musgrave comes out with a study and says this is how many ounces we can produce. That transaction is being valued at close to $500 an ounce, right? On a production target, EV per production target basis for Astral Resources now, with 845,000 ounce production target, we're sort of getting valued about $60 an ounce.
So no matter how you want to cut the maths, there's upside everywhere.
100%. And even the peer group, so all the developers that have put studies out, that peer group is sitting at about $90 an ounce. So there's certainly some significant upside, even without the threat of a potential M&A activity. So we want to backfill that gap in valuation, and then we want to continue to grow and demonstrate just how good a project Mandilla can be.
Marc, you've done a great job getting it to this stage. There's clearly value to be had in it, hasn't it? I mean, the market is probably still waking up to the size of the opportunity and the scale of the project. But hopefully this podcast might get some people to actually have a longer look at the scoping study and say, hey, this is a significant project in the making. But with the growth you've got coming, you've got the drill rigs going, there's various activities happening in parallel. So there's no reason to think that there won't be excellent news flow for several months as you ramp up the development work.
Yeah, agree. And to be honest, I guess a lot of the market is waiting for that change in sentiment, and invariably it always comes. All we can do as a company is position ourselves to be like at the forefront of that, because obviously that rising tide lifts all boats. We just want to be one of the ones that gets lifted higher, and that's why we're working so hard on this Mandilla Gold Project, our Fayetteville targets, and aggressively continuing to grow in what potentially is a tough market. We've always been able to fund our business. We will continue to fund our business. This scoping study, if you look through the detail, you'll realise that the geotechnical work is actually done to a pre-feasibility level. The detailed mine design and scheduling probably meets the requirements for a definitive feasibility level. The capital costs we have kept at a scoping study level, because the reality is maybe there is an M&A opportunity, and so there's some aspects of, as you drive this project forward, that you want to be mindful of expending money where you get the best bang for dollar, and that's certainly what we've been doing.
Righto, sounds fantastic. Thanks for your time today, and we'll watch it closely. Maybe we will get you back on the Whole Truth podcast early next year to see how things are panning out. All the best. Thanks, Marc.
Cheers. Thanks very much, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media. hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.